Okay, we're going to get started by looking at the S&P 500 like we usually do. We're going to look at the S&P 500 stochastics. Okay, and along with the trend line, you can see that we have basically a perfect trend line going back to April of this year. We are overbought and we have a lot of momentum in the stock market. All of the indices right now are above the 20-day exponential moving average, the 50-day, the 20, the 150, and the 200-day moving average. So that's very positive for the stock market to continue to go up. Let me see. Okay, so right now we're right in the middle of earnings season. We just started with the banks, and we're this week we're going to start with some of the big tech stocks. Um, so let me see. This past week we've had Netflix came out with their earnings. We had Tesla, IBM, and Intel. We had this week we're going to have Waste Management, Visa. Then we have a lot of the big tech stocks. A lot of times people get really excited around the tech reporting season, and stocks will definitely go up or down in a major way um, whenever the earnings come out. So we have Meta, Microsoft, Alphabet on Wednesday, and on Thursday we have Eli Lilly, and we have Amazon and Apple. So this is one of the biggest earnings um, reporting weeks of the year. Um, so we have a lot of that to look forward to. A lot of times, um, the stocks go up a lot whenever good earnings come out. So let's see if the earnings come out good. And right now they're expected to come out. They're expected to be good earnings. Okay, so what else do we have to look forward to? We have NVIDIA earnings coming out in the end of November, and we have Google earnings coming out in next week, and those are the big reporting times. And after that, we usually have November and December. People are really excited about the holidays. Three major holidays coming up. We have the Thanksgiving, we have Christmas, and New Year's, all within a short amount of time. And a lot of times the stock market levitates during the months of November and December. Okay, so let's look at some of our numbers. Um, we have like a neutral momentum. Right now we have around 50%, 57% of the, wait, 62% of the S&P stocks above the 200-day moving average. So our formula is we're kind of we're not in bullish territory yet, but we're getting there because last week it was 57% of the S&P above the 200-day. So we're actually gaining some momentum here. As soon as we get above 70%, that means the majority of stocks are trending upwards, and that signals broad market strength. Okay, so we're going to have some catalysts for the market to go up. We have earnings reports coming out this season. We have Fed is going to lower the interest rates because we had a tame inflation report come out recently. So we have not only Fed reducing the interest rates, we're going to have good earnings reports, and the market breadth is helping out right now because it is actually improving. And we have one of the catalysts for the market to go down, possibly off the table. If we look at the Yahoo Finance front page, we have optimism rises for Thursday's summit between Trump and XC. And we have some leaks that say that they struck a deal on trade critical minerals in the southeast Southeast Asia. You know what I translate that into? Number one, all of the um all of the stocks that were going up a lot based on mining in the United States are going to go down, like MP Materials. A lot of the stocks that rallied um, USAR. So it seems like we have some of the tariff problems with China off the table. That is really good for the catalyst for the market to go up. Let's see if something comes out of that. And okay, so let's look at the stock market returns in October. Yeah, traditionally, this is one of the best months of the year. It usually goes up around 1%, and it is going to be very volatile. It's the most volatile month of the year. It is known for some of the worst market drops in history back in 1929 and 1987, both 20% drops. Um, so there's always a skittish amount of investors in this month. Okay, so we already mentioned that we have like a perfect trend line for the S&P 500. We're overbought, and the U.S. Treasury has been going down. The yield of the 10-year U.S. Treasury has been going down, and there's an inverse correlation. We expected that, um, and the S&P has been going up as the yield has been going down. And the reason for that is we have, if it costs less to borrow money, companies will grow faster. So that's basically the idea. The and let's see what other variables we're looking at. We can see that the crude oil is up 7% in the last week. Why would that be? Um, Say if we have a deal between United States and China, as we just saw on the front page of Yahoo Finance, the global economy is going to be improving. So as the global economy improves, there's going to be higher demand for oil, and that is why the price could be why the price goes up. Inflation. We had an inflation report 3%. That was a little bit more than 2.92% from last week. Um, the US dollar index is unchanged for the week. It has been going down, but you can see in the chart, it's kind of starting to go up. You can see that we were in a downtrend for quite a while. So some of the big tech stocks might, if this trend continues, they might have a headwind from the US dollar. So hmm, they might report that some of their earnings were worse than expected because of the US dollar appreciation. And it goes both ways. So it's called a zero-sum game. Sometimes you get a benefit from the dollar depreciating. Sometimes you get a benefit from the dollar appreciating. So, so right now we're kind of in an uptrend. So we'll keep an eye on this dollar index. Um, Gold is up 2%. It's going down today because um, there was a lot of uncertainty between the trade between the United States and China. And if indeed there is some kind of deal between America and China for some kind of trade deal, look at this. Gold extends drop as U.S.-China trade progress dampens demand. Okay, so this has been a safe haven. It's up 60% this year, gold. So it doesn't have earnings. It doesn't give a dividend. Um, it's very speculative, and it's been it's been supposedly going up a lot based on supply and demand this year. A lot of central banks have been buying gold as an alternative to the dollar, but right now it's losing its luster when some of these geopolitical tensions are resolving themselves. So we'll keep an eye on gold. Um, okay, and let's look at the fear greed index. We have fear. Our translation, fear. Start looking for things to buy. Whenever I see fear in the market, I try to look for stocks with peg ratios less than one. Um, Stocks that are being sold, thrown out with the bathwater. Like the baby is thrown out with the bathwater. We want to look for our screens. When we do our screens, we want to look for a peg ratio of less than one. And I picked out a couple that are interesting. I like stocks that are trading for less than their total worth. And I like to accumulate a little at a time. Um, but I try to keep the stocks to a large market cap because they're a little bit more reliable. So anytime I see a peg ratio of less than one, I gets my interest. So let's look at the amateur investor survey. You can see that majority are still bearish. The translation, we want to do the opposite of the amateur investor. Whenever the amateur investor is bearish, we want to buy and don't sell. Okay, so let's look at the VIX. The VIX was 20. People were fearful last week, and now it's at 15. So we have it's kind of a bull market right now. We don't have any fear in the market at 15 VIX. So I guess in our investor emotional graph, we have fear in the market right now, and we have issues that may lead to the crash. We might have an AI bubble bursting. We do have inflated valuations. Right now, the average stock is about 30% overvalued in the S&P 500. So we very well could deflate 30% um, to be fairly valued. We have we don't have the economy. The economy definitely is slowing down right now, but it doesn't seem like it's going into a recession. We do have some of the tariff threats kind of subsiding with our front page Yahoo Finance stories. We see optimism rises. So, um, so the possibility of tariffs leading to a crash are kind of low right now because number one, we have some progress made in China. Number two, the stock market is totally used to tariff threats now, and it doesn't really pay much attention to it anymore. Okay, so let's look at okay, let's look at the PE ratio for the S&P. Right now it's at 25.65. That's at one of the highest rates going back 100 years. So we're definitely paying a premium right now for the stock market. And that might be justified because we are actually we're beating earnings estimates in our most recent earnings reports. So a lot of the S&P is going to be reporting this week. So let's see if um, the stocks report better than expected earnings and see if we can actually live up to the expectations um, of the earnings estimates. All right, let's look at our worst to first. You can see that materials, energy, healthcare, real estate continue to be some of the worst performing sectors. Communication services, IT are the best. Um, let's look at this is a S&P 500 PE valuations relative to history. You can see energy financials are don't get much respect right now. They are trading at a PE of around 15 or 16, and that's less than the 10-year and 30-year um, earnings. I mean, um, multiples that they used that they've gotten in the past 20, 30 years. Okay, so let's look at the okay, you can see that the energy sector is the worst performing sector this year so far. We have the real estate sector um, down 4%, and we have the materials sector down 7%. And the IT sector and the communication sector are both really good so far this year. Let's look at some of the stocks going up and down. Okay, you can see Ford is doing really good. Coinbase, Albemarle. Do we see any connection in any of these? We see okay, we see Vistra first, Vistra, Micron, AMD, IBM. These are all AI stories. Vistra actually helps make the data centers, AI data centers. We have the Micron, of course, they make memory for the data centers, AI data centers. We have Constellation Energy Group. They are a company that is a utility that helps power the AI data centers. We have AMD, they make chips for the AI data center. Okay, so we have a AI data center themed top performers today. And we have for the top decliners, we have Deckers Outdoors. They make shoes like ONN. We have Mohawk Industries, Trade Desk, Tesla, Baker Hughes, NVR. We have some home building stocks. So NVR is home building. We have Mohawk Industries. They make things for the home. We have Newmont Corporation. They manufacture gold. So gold is coming out of favor because trade tensions are loosening right now. We have Trade Desk. Tesla might have been down because of their earnings report. Baker Hughes, um, they they're oil service company. So as the price of oil, they're at the mercy of the price of oil. We have NVR, of course, a home building company. APA is an oil company. Okay, so we have an AI themed market movers for a top 10. Let's look at the sectors going up and down the most. Okay, so if we see our 10-year, let's look at our 10-year. Our 10-year shows that we are kind of in a downtrend. We're up a little bit today, but we're kind of in a downtrend. So we expect, let's look at our cheat sheet. If the yields are going down, we expect small cap stocks, heavily indebted stocks stocks that are borrowing money, that to be good for them. High yielding stocks should go up, home builders and speculative, non-profitable companies. Okay, those should be doing good. The ones should be negative are tech stocks, financial sectors, brokerage firms, and insurers. Let's see if that happened today. Sector ETFs. Okay, so we see the telecom ETF doing the best. Um, so it's positive for high yielding stocks. So as the yield of the 10-year goes down, there's a high demand for yield in the stock market. So telecom is one of the highest yielding sectors. Like AT&T pays 5 to 6%. Verizon, they pay 6% dividend. Um, Semiconductor ETF is next. Um, I guess the semiconductor, there's a lot of optimism around a China-US deal. Banking ETF, we have technology sector ETF fund. We have utilities, they pay a dividend and they're also involved with AI. So dividend oriented stock, that kind of matches our theme for lower yields on the 10-year and biotech ETF. That makes sense because they are heavily indebted companies and they're not profitable, but they need to borrow money. So the lower the yield on the 10-year, the better it is for companies that need to borrow. And real estate, as the interest rates go down, it makes buying houses more profitable or um, buying houses a little more affordable. So that helps the real estate sector. Let's look at the stocks that are going down the most. The gold miners, okay, we were just talking, the front page story of Yahoo Finance was gold extends drop as US-China trade progress dampens demand. Okay, so that explains why gold miners are down a lot. We have gold miners ETF, we have gold energy sector fund. That could be because let's look at the premium. What? Hold on for a second. Okay. Okay, we're gonna see the price of oil is down. Okay. So as the price of oil goes down, you're gonna see the every energy sector stock go down with it. Okay, so that's why you have a lot of oil stocks, oil sector stocks going down. And okay, that explains that explains. So our correlation between interest rates, this has held up today also. It's a very interesting correlation. Um, okay, let's look at Dan Now's picks from the beginning of the year. ADTN, it's a networking play for AI infrastructure, is up 21%. Cisco is up 19%. IJJ, the mid-cap ETF, is only up 5%. That's the worst performing of his picks. And KBWB, the big bank ETF, is up 17%. Um, his pick of cash at the beginning of the year was not a good pick. I guess it could have helped during the crash in April, but um, right now it's looking really bad compared to his other picks. I mean, the stock market's up 15% this year, so perhaps cash wasn't the best. Let's look at okay, let's look at these top stories in Yahoo Finance. We see oil climbs as prospect of U.S.-China breakthrough buoys outlook. Okay, so if there's a deal between the United States and China, that's going to improve the global economy. It's going to allow more things to be made and sold in China, in America, and as as the economies around the world improves, there's more demand for oil. So that makes the price of oil go up. Okay, so optimism rises for Thursday's summit between Trump and Xi, and you have these leaks where there could be a deal between the United States and China. So that's gonna make the whole stock market go up if this is true because there's a lot of um, people fearful of a potential trade war between the United States and China. So this eliminates one of the big um, fears of the market. Let's look at some more. Okay, that's it. Okay, let's look at our stock screen for this week. We we um we see a couple stocks trading below the peg ratio of 1. I'm always interested in those. Let's look at what those are. The first stock that I see is Micron. Um, they don't seem to get any respect. They have a PEG ratio of 0.19. That means they're 5 times undervalued. They make memory for the AI data centers. That's kind of where they make a lot of their money. And they also make memory chips. So, um, Uber, okay, they're selling at $94 and supposedly an 18% discount. They have a business where they have an app and customer service costs, but basically a lot of the expenses for the business are paid for by the people that are writing um are doing the writing for them. So it's a very capital light company, which I like capital light companies like Visa, MasterCard, and American Express. And Uber is an example. They have an app and servers to maintain, and it seems like they could be disrupted by companies like Waymo that do automated driving, but it seems like Uber has a niche where they have most of the market share for ride hailing in the United States and the world right now. So we'll see if they continue, if they're displaced or not. Charles Schwab is around 9% undervalued. They're one of the biggest banks in the world. Although they're a brokerage, they are still a bank. And they're an example of one of the sectors that are out of favor right now. If we go back to let's look at this right here. Financials are they're selling at one of the lowest PE valuations relative to history. So whenever there's st sectors that are undervalued, I like to start looking at that sector for potential stocks to buy. And we have healthcare um, as being an undervalued sector. Whenever we're buying IT right now, you're definitely paying a premium. And although the next 3 months are are weighted to a very for the stock market to go up, we still have we still have an overvaluation for the consumer discretionary, the IT and industrials. So let's go back to what we're looking at here. Okay, so we also see GE Vernova. They make turbines for energy generation. So as the demand for AI energy increases, you're going to have more sales at GE Vernova, and they're around 9% undervalued now. And we also have Newmont Mining. It's supposedly 70% undervalued, but um, right now gold is out of favor. It's going down a little bit. So I'd have to look at that some more. I don't think this is right. I don't think it's 70% undervalued, but um, all right. So let's look at a little news story that came out. Two top bargain stocks ready for a bull run. And they mentioned two stocks, Alphabet and is arguably the best positioned AI company in the world. TSMC has become the heart of the semiconductor industry. Okay, so I thought it'd be interesting that we haven't looked at Alphabet since like April. April, it was has a PEG ratio of zero point 0.7, I remember, zero point 0.8. But right now, um, this is the Motley Fool. They think that Alphabet they have a dominance in search right now. They just got a pass from the regulatory people. They have a PE of 24 times expected, and that is cheaper than a lot of their Mag 7 peers. And they also said they have some future things going on. They have some quantum a chip that they're working on, and they also have a robotaxi business. In their Google Cloud, they're making deals every day. So it seems like they have a lot of tentacles in the AI world, and I think their product is pretty good for search and AI because a lot of times I don't even have to go to a website to get the answer that I want. So I thought it'd be interesting to go through and look at Google right now. You can see that um, they're definitely in an uptrend. They're above all of their moving averages, including the 20-day, the yellow line here, 20-day exponential moving average. And you can see it's a very positive trend line. They're overbought right now. And let's look at their numbers. You can see that their profit margin is 31. That is 3 times what we're looking for. Return on equity is 34. That is 3 times what we're looking for. Um, they have more cash than they have debt. They have 50 billion in cash. That'll allow them, they don't need to borrow money. And they make around 50 billion in free cash flow every year. Okay, so they're very profitable. It seems like between 25 and 26, they're only growing at 8.6% for some reason. They've been growing at 14% for the last 10, 12 years at least. So I'm going to stick with 14% of what they're growing at right now. And their PE is 24. Right now, their PEG ratio is 1.71. So let's look at what Morningstar said. They think that their price to fair value is 0.85, meaning they're 15% undervalued. Their fair value is 300. So they think that it's, let me see. They think the Anthropic deal and Gemini momentum stand to deliver, and their fair value is up 27%. So they are very impressed by the Google's AI offerings. They think it's undervalued. Um, so there are deals like every day where there are companies that partner with Google or Alphabet for their data center usage. And that's becoming like a bargaining chip for these big companies. And they get a part of their business or they get part of the profits. Um, or they just get a lot of business for their cloud services. So let's look at what CFRA said. They have a buy recommendation with the target a little bit higher than where it is now. And let's read this. Our buy reflection in valuation, free cash flow potential, and belief that Google can sustain 10 to 13% revenue growth through 2027, driven by AI and cloud prospects. Search monopoly outcome represents a major victory, according avoiding harsh penalties while permitting revenue sharing with partners. Google Cloud growth of 25% due to AI monetization and Gemini's capabilities. AI innovation across ad ecosystem should support higher advertiser return on equity or on return on investment. Gemini app has 450 million monthly users with 50% growth. Okay, so they have some momentum with AI and they're not losing share for their search and or Chrome. According to CFRA, they're totally fairly valued. Um, they're not overvalued or undervalued. They say they're overvalued by 0.5%, but that's like 260 is a fair price for the stock. You can see that their earnings are in a straight line up. I love to see that in a growth stock. Let's look at another stock that they had on their list of the top 2 undervalued stocks. So let's look at this. Hold on. Top 2 bargain stocks ready for a bull market. So you had Alphabet and TSMC. TSMC has become the heart of the semiconductor industry. Let's look at that to see. We haven't looked at it for a while. Okay, it also is in an uptrend. You can see that has almost perfect trend line, and it bounces right on a 20-day exponential moving average, which is the yellow line. It's halfway between overbought. No, it's 80 in the stochastics. It's 83, so it's overbought right now. I like to buy this stock when it hits the bottom of the trend line, and it's totally oversold. Um, let's look at the numbers. They're growing at 18%. Their PE ratio is 25, so they're around 30% overvalued. Their PEG ratio is 1.3. Um, you can see their profitability is great. It's 3 times what we're looking for. And return on equity is great. That's 3 times what we're looking for. Um, the balance sheet is amazing. They have over $1.75 trillion in cash, which is pretty amazing. And they make a lot of money. They make a half a trillion every year in free cash. So that is amazing. Let's look at Morningstar. They think that they're totally fairly valued right now. They said they are lifting valuation by 6% as insatiable AI demand comes from multiple customers. Um, I'm surprised that this company doesn't raise their rates a little bit. I mean, NVIDIA is totally counting on them for manufacturing um, all of their chips, and they're probably the only ones that can do that kind of manufacturing. But right now, this company's kind of in the middle of a um, global trade war. So the amount of things that this company can create is kind of limited to what the geopolitical tensions are allowing. So let's see. The CFRA says they're a buy, and I like to read this. Our 4 stars buy rating reflects sustained technology leadership, accelerated AI demand, and resilient margins despite overseas fab dilution. Management's upward 2025 revenue guidance revision is a structurally compute megacycle beneficiary. We believe that the markets underappreciate back-end leverage and AI customer mix shift. Okay, the supply remains tight through 2026, providing pricing power. Record profitability, disciplined CapEx, and technology leadership support premium valuation. Okay, so CFRA did not give a fair value calculation. I don't get a warm feeling in my stomach whenever I don't have a fair value calculation from CFRA. But you can see that we have increasing earnings around 10% every year, which is pretty good. And okay, so it seems like this stock is going to continue to do good as the AI story develops. All right, so that was a good little talk. All right, well, thanks for attending. I think that's all I had to say for today. If you have any questions, let me know, and I'll see you next time.